Blockchain is the core technology behind Bitcoin and thousands of cryptocurrencies and has promising potential beyond digital currencies. Blockchain technology might be one of the most hyped innovations of the 21st century. Developed to support Bitcoin, blockchains now power thousands of cryptocurrencies, and developers are working on integrating the technology into businesses, including medicine, art, and finance. In order to understand the growing interest, it can be helpful to understand how blockchain works, why it has value, and what makes it different from other internet technologies. Please stay with me. We're here to learn deeply what's blockchain, the technology behind cryptocurrencies. Please consider subscribing. A blockchain is a public digital ledger of transactions maintained by a network of computers in a way that makes it difficult to hack or alter. The technology offers a secure way of individuals to deal directly with each other, without an intermediary like a government, bank, or other third party. The growing list of records, called blocks, are linked together using cryptography. Each transaction is independently verified by peer-to-peer computer networks, time-stamped and added to a growing chain of data. Once recorded, the data cannot be altered. While popularized with the growing use of Bitcoin, Ethereum, and other cryptocurrencies, blockchain technology has promising application for legal contracts, property sales, medical records, and any other industry that needs to authorize and record a series of actions and transactions. How does blockchain work? Using the Bitcoin system as an example, here's how blockchain, also known as distributed ledger technology, works. First, the purchase and sale of Bitcoin is entered and transmitted to a network of powerful computers known as nodes. Second, this network of thousands of nodes around the world veer to confirm the transaction using computer algorithms. This is known as Bitcoin mining. The miner who first successfully completes a new block is rewarded with Bitcoin for their work. These rewards are paid with a combination of newly minted Bitcoin and network fees, which are passed on to the buyer and seller. The fees can rise or fall depending on the volume transactions. Third, after the purchase is cryptographically confirmed, the sale is added to a block on the distributed ledger. The majority of the network must then confirm the sale. Fourth, the block is permanently changed to a previous block of Bitcoin transactions using a cryptographic fingerprint, which known as hash, and the sale is processed. The concept of blockchain technology first appeared in academic papers dating back to 1982 in a dissertation discussing the design of a distributed computer system that can be established, maintained, and trusted by mutually suspicious groups. But it was 2008 paper by pseudonymous Satoshi Nakamoto titled Bitcoin, a peer-to-peer electronic cash system that brought an academic theory into real-world use. What does pros and cons says? Using Bitcoin as an example, here are some of the pros and cons of how blockchain technology works when applied to the cryptocurrencies. Let's look on pros. Decentralization. While the US dollar is issued by the Federal Reserve, no government agency issues or control Bitcoin and other cryptocurrencies. This also means that the ability of any one government or agents to determine the fate of public blockchain is eliminated. The lack of intermediaries reduces cost, as the fees associated with the third-party transactions are also eliminated. Another byproduct of how blockchain works is the time efficiency. The blockchain is open for business 24 hours a day, 365 days a year, unlike banks and other intermediaries. Transparency plus anonymity. All transactions of the Bitcoin blockchain are recorded on computers across the network. Transactions are completely transparent because address and transactions history of the Bitcoin wallet, which hold the cryptocurrencies, are publicly viewable. But the owners of each wallet connected to those public addresses that are anonymous and not recorded. Accuracy and security. Because the transactions involve a tight human interactions, there are lower risk of errors. Each transaction must be confirmed and recorded by a majority of the network nodes, which makes it vanishingly difficult to manipulate or alter informations. This also prevents anyone from spending in Bitcoin more than once. Blockchain applications beyond cryptocurrencies. Blockchain technology creates efficiency that potentially extend far beyond digital currencies. While cryptocurrencies like Bitcoin are on a public blockchain, many applications for business can be created on private blockchains network. Blockchain supply chain. Companies like IBM Blockchain are already providing private network solutions using blockchain technology to more accurately track product supply chain. For example, companies can use the technology to quickly find out where recorded food products have been shipped and sold. Healthcare records. Deloitte Consulting has suggested that nationwide blockchain network for electronic medical records may improve efficiencies and support better health outcomes for patients. Smart contracts. With blockchain technology, contract terms can automatically be changed or updated based on hitting a predetermined set of conditions. Digital elections. Some developers are working on blockchain technology to be applied to elections. Property transactions. Proponents say blockchain's technology can be applied to a wide range of asset sales, be it real estate, auto or investment portfolios. Opportunities for the underbanked. In countries and regions with poor or corrupt financial institutions, cryptocurrencies based on blockchain protocols allow the transfer and holding of cash that bypasses unscrupulous third parties. What Doeskhan says? Criminals like crypto. Like a lot of new technologies, some of the first adopters have been criminal enterprises. They use cryptocurrencies like Bitcoin both as a payment because of privacy it provides to the target holders of Bitcoin for scams. For example, Bitcoin was used by consumers of Silk Roads, a black market online shopping network for illegal drugs and other illicit services that was shut down by FBI in 2013. In the recent ransomware attack on Colonial Pipeline, the company paid $4.4 million in cryptocurrency to unlock its computer system. Meanwhile, Bitcoin investment scams have skyrocketed in tandem with its recent historic rise. The Federal Trade Commission reported nearly 700 people lost $8 million from October 2020 through March 2021 in schemes touting quick returns, a nearly 1,000% rise in reported loss year-on-year. Blockchain cryptocurrencies are highly volatile. The popularity of cryptocurrencies exploded in 2021 as Bitcoin hit a record spot price nearly $5,500 in April. But owing to its inherent volatility, the price of Bitcoin dropped nearly 50% by early June, then began to climb again. Bitcoin recorded a previous record high of nearly $20,000 in December 2017, but by December 2018, it was trading below $3,500. Crypto use is still niche. Many more exchanges, brokerages, and payment apps now sell Bitcoins, and many companies such as PayPal and Microsoft accept Bitcoin for payment. Still, purchases with blockchain currencies like Bitcoin remain the exception, not the rule. Also, the sale of Bitcoin for purchases on cash apps such as PayPal requires users to pay capital gains taxes on the Bitcoin sold, beyond whatever state and local taxes are paid on the product or service. Environmental impact of Bitcoin. The process of Bitcoin mining uses a network of high-speed computers that consumes a lot of energy. If the Bitcoin system were a country, it would be the 34th biggest consumer of electricity, behind the Netherlands and ahead of the Philippines, according to the University of Cambridge Electricity Consumptions Index. Tesla CEO Elon Musk announced in May that car maker will no longer accept Bitcoin until the cryptocurrency can find ways to reduce its carbon footprints. Developers of the other blockchains have come up with the less energy-intensive options. Bitcoin blockchain is slow. The Bitcoin blockchain can process about 7 new transactions a second. By comparison, credit card giant Visa says it can process 2,400 transactions per second, according to the company. That presents the Bitcoin system with a scalability problem. Other forms of blockchain-based cryptocurrencies are working on this problem. An eager anticipated upgrade of Ethereum system known as Ethereum 2.0 is expected to be capable of handling 10,000 transactions per second, up from the current rate of 30 per second. So, what's the future of blockchain technology? While the Bitcoin system is the best known application of blockchain technology, there are thousands of cryptocurrencies that are built on the back of this emerging technology. While it remains to be seen if Bitcoin will succeed in supplanting other forms of traditional payment methods, the application of blockchain technology are growing fast, and proponents says they may lead to dramatic changes across industries. Please consider subscribing to this channel, like and comment to this video once you find out helpful. Ciao.